Hello, everyone. Welcome to another episode of Gray Matter. Well, as you know, we try to provide a very eclectic group of people to you so that you can gather information and learn more about things that are going on in our country. And today, we have with us kind of a special treat, someone who is a very learned person in the realm of investments. This is someone who actually provides advice to some of the wealthiest people in Canada and throughout the world. His name is Petar Pejovic. Thank you for being with us today. It's great to have you on the program today, Peter.
Thank you, Leighton, and the honor is all mine. I've been looking
Yeah.
forward to this for several weeks.
Okay. So, as we always do, we've got a few framing aphorisms. We're going to start with someone who's a very famous economist who I know is well known to you, Peter. His name is Milton
Mhm.
Friedman, who once said, if you put the federal government in charge of the Sahara Desert, in 5 years, there'd be a shortage of sand. He must have been talking about our current government in Ottawa. Secondly, from someone, perhaps one of the great men of the 20th century, Sir Winston Churchill, who said, for a nation to tax itself into prosperity is like a man or woman standing in a bucket and trying to lift themselves up by the handle. Next, from someone who's one
Absolutely.
of the world's best known financiers, Ray Dalio, the American, who said, if you are not aggressive, you're not going to make money. If you're not defensive, you're not going to keep money. We're going to ask Peter what he thinks about that. And
Oh,
finally, from
true.
Charlie Munger, who's probably best known as being Warren Buffett's business partner, who said, it is remarkable how much long term advantage people like us have gotten by trying to be consistently not stupid instead of trying to be very intelligent. So, Peter, welcome to the
Yes.
program. It's great to have you on here. Where I'd like to start is, if we could, is with your background, with your ethnic background. Could you talk a little bit about that cultural heritage and sort of how that has shaped you and your way of thinking, as well as the concept of being someone who's come to Canada as an immigrant and really become a highly successful person? I think this would be fascinating to many of our viewers and listeners.
No, thanks, Leighton. And yes, our past always shapes our future and who we are as a person. And I think my story is probably fairly similar to a lot of immigrants, who came to Canada. Not maybe in recent times, but decades and decades ago. So yes, I was born in the former Yugoslavia, and at the time it was considered a socialist slash communist nation. And our family did pack up and leave Yugoslavia in 1975, and we emigrated to Canada in 1975. And let me tell you, as a new immigrant to Canada in the 1970s, we certainly fell in love with Canada. And it's a love for this country that I had back then when I first came here, and I still deep down inside have today. Even though the Canada that I moved to back then is very different than the Canada that we see now.
Yeah.
Being a product of a communist slash socialist system, we understand some of the tactics and techniques, say, that are used firsthand, like firsthand knowledge of how that kind of system operates. And then we see, the light of call it a Western economy. But then we're very quick to identify when portions of that Western economy might start looking a little bit more and more, maybe too much like that which we left.
Hmm.
Because it's very difficult for us to not see it, since that's what we were born into,
Hmm.
if that makes sense.
Yeah, well, it does, and
Yeah.
your family. I know that you're from a remarkably successful family. Your brother is also someone who's in business with you now with Wellington Altus. Do you want to talk about the work that you do at Wellington Altus and the team approach and the types of services that you provide to your clients? And do you want to talk about that a little bit?
Sure. So we're a wealth management firm. So Wellington Altus is the larger wealth management firm, which has offices all across Canada. We are one group, which is called Pejovic and Associates. and that is one group, which is a division of Wellington Altus Private Wealth. And that consists of my brother and I, who are the two senior portfolio managers. And so what that means is we don't sell investments. Like, we're not in the business of selling people products or investments. We're the actual money managers who manage people's investments from scratch. So we have the license and the authority not just to sell somebody an investment, but to actually create investments, from a bare bones basis. And for that, we need a team of different individuals. So we're a team of 8, and we have financial planners, we have investment advisors on our team, and we have client service personnel and administrators. And all of them are equally important in keeping the show running. But essentially, we run large scale portfolios that invest in global financial markets. That includes equities, that includes fixed income like bonds, that includes cash instruments, commodities, copper, uranium, precious metals like gold and silver, and even cryptocurrencies like Bitcoin and Ethereum. And we combine those different asset classes essentially into funds that fit an entity, a person or an entity's objectives, and get them the results that they want. So essentially, we try our very best to not be stupid, uh, and yes, be intelligent, but try to do so by making the least amount of mistakes
Mhm.
possible.
Well, let's
Yeah,
drill down in this a little bit
yeah,
further, because and it's important for people to understand what you do. It isn't like, the person selling mutual funds down at the
no,
local bank or insurance outlet. You are dealing with $30 billion of assets or more. You're dealing with high asset individuals, and so let's clarify that first of all. But I have a two-part question that arises from that. Firstly, you use terms like betting and hedging, but when
hmm
we when you say betting, you're not talking about games of chance. When you
no,
say hedging, what I get the sense of is that you're talking about
yes,
applying mathematics in a way that is designed to produce the maximal outcome for clients. And secondly, what's it like to try and provide advice to people who are very successful?
yeah. Again, great questions, and that's one of the reasons I was so excited to be on this podcast is because not only have you in the past had some amazing guests. And I feel privileged to be part of that group. But you're a great interviewer, and you ask, you're well learned and well researched, and you ask good questions. So just quick quote of just a clarification. So Wellington Altus manages $33 billion
Wow.
across Canada and the US. I don't manage that entire 33 billion alone by myself. We're made up of a group of partners, to which I'm one of those partners at the firm, where we collectively manage that money. But certainly, I have my own sleeve in there that I run, that I'm responsible for. Um, and then, on the hedging versus betting, you're right. I did use the word betting there, but I used it in a context of what you should not do.
Right.
You should not bet. You should not say, I'm going to bet everything on stocks, or I'm going to bet everything on crypto, or I'm going to bet everything on gold in isolation.
Hmm.
Okay.
Hmm.
Because any one of those things could be good or beneficial in their own way, but in isolation, they can also pose tremendous problems, for people as well. The magic really comes in the blending of those asset classes
Right.
in a way
Right.
that hedges risk, such
Mm.
that it's not no longer a bet. It becomes basically a mathematical probability that you're going to
Right.
achieve a certain outcome, a desirable
Right.
outcome at
Hmm.
that. So if you can measure, one of the measurements of risk is standard deviation, but also beta. So beta is how correlated one thing is to another thing. So for example, something with a beta of 1 to the stock market means it's essentially exactly the same thing. So if you have two things with a beta of 1, you are doing nothing for yourself in the realm of diversification. So
Interesting.
mathematically, you are wasting your time. You might as well pick one or the other, and it's not going to make any difference because those two are the same.
Hmm.
Likewise, if something has a beta of -1, say to the stock market, you're also wasting your time because that means it's exactly opposite of the stock market. So if the stock market's up, this is down. If the stock market's down, this is up.
I see.
Well, mathematically, what does that get you? It gets you zero.
Hmm.
If something is up one and the other one's down one, that's zero. So what do you want then? You want something that's not opposite and not the same. So that's called being anti-correlated or non-correlated. And that's a beta of zero or something close to zero. It could be like 0.1 or 0.2 or -0.1, but something that kind of hugs that zero bound. So gold has a beta of zero to the stock market. So mathematically, when you blend gold with stocks, and again, you have two investors there I gave the example of. One likes
Hmm.
stocks, one hates stocks, one likes gold, the other one hates gold. It's like, well, why don't you have both? Because if you blend both together with a beta of zero, you're mathematically going to improve your odds of success,
Hmm.
while at the same time lowering risk and lowering volatility. And then, so that's kind of one kind of really obvious example. And another example is going back to crypto now. So is crypto good or bad, great or not great? Um, well, if you kind of, it's neither. But if you look back in the last, say, 10 years or 14 years, I believe Bitcoin has been the top performing asset class in, I believe, was it 11 out of the last 14 years? It's been the
Really?
top performing asset class in the
Wow.
world.
That's
And I
remarkable.
believe, yeah, it is. But wait a minute, though. I think it's in the last 10 years, I believe it's a top performing asset class in the world in 8 out of the last 10 years. But in the years that it wasn't, it was the worst. So in
It's
the
like a
last
Dickens
14,
novel. It was the best of times and the worst of times.
yeah,
Yeah.
it's either the best or it's the worst. It's usually the best, but when it's not, it's the worst. So you got to be very careful with this.
Hmm. Hmm.
It's interesting. It's extremely interesting, and one should consider it, but be very careful with it because to say it's volatile is an understatement. So how do you deal with that? You size it appropriately where you should win. Now,
And this is
if
hedging.
you
That's the way. That's
this is
hedging.
hedging. That's
Gotcha.
hedging. Yeah, and well, that's one way. There's multiple ways to hedge.
Yeah. Yeah.
Another way is you can also do something called a long short strategy, where you have a positive position on one end and you take a negative position on the other end, so that your risk level is actually neutralized. But
Right.
that's a different story. But through appropriate sizing, you could enhance a portfolio with an asset like Bitcoin. But if you get the sizing wrong, like the position size wrong, it could end up going very badly
Hmm.
as well
Hmm.
for you
Yeah.
if you haven't done the math.
Hmm.